Welcome to this technical explainer. We've designed this specifically for developers and system architects who are tasked with safely migrating legacy accounting frameworks right into modern 2026 standards. Look, if you're dealing with legacy TurboCASH5 data, you probably already know that the underlying architecture is kind of like a ticking time bomb when it comes to modern localizations. So today, we're unpacking the exact 2026 roadmap to modernize the chart of accounts for both English and AFRIKAANS industries. We'll be covering the technical shift required to support multi-byte characters, the brand new 4x3-digit layout, and the precise developer workflow you need for this migration. All right, let's jump straight in. Our agenda is broken down into 5 distinct phases. We're going to start with the legacy schema crisis, move into the 2026 blueprint layout, dive deep into master refactoring to IFRS, map out the repository rebuild matrix, and finally, look at how this all scales for micro, small, and medium enterprises. Let's get to step 1. Section 1, the legacy schema crisis. So what is the actual core of this crisis? Well, legacy database schemas were originally designed for single-byte character sets, like Latin 1. But those old schemas are completely choking on modern multi-byte localizations. You're basically dealing with a classic data truncation and schema collision crisis. When you try to force modern multi-byte Unicode strings, we're talking UTF-8 for Arabic, Chinese, or specialized localization characters, into a legacy 16-character batch type field, or maybe a 35-character account field, it instantly triggers a catastrophic dynamic SQL error 303 in Firebird. That is a fatal arithmetic exception. It's a hard, immediate stop for your database. To fix this, to permanently inoculate the Firebird engine against these crashes, your absolutely mandatory first step is expanding the database field lengths. You have to bump up the accounts, groups, and batch types to varchar 128. Taking this step ensures that no matter how complex the multi-byte localization gets, your database schema hierarchy remains perfectly intact, with zero overflow. Moving on to Section 2, the 2026 blueprint layout. Okay, so upgrading the database fields is really only half the battle. We also have to restructure the data itself, because the outdated terminology in these legacy systems is seriously holding you back. We absolutely must abandon broken legacy terminology like debtors, creditors, and stock. Honestly, using those outdated terms completely alienates the modern academic and professional market. Instead, we're shifting to strictly IFRS-compliant terms. Think accounts receivable, accounts payable, and inventory. This brings the software perfectly in line with the modern, formal accounting terminology that universities, colleges, and accounting professionals expect today. And this brings us to the new structural foundation, the 4x3-digit architecture. We are moving to a 4-digit main account block, say G4100, and pairing that seamlessly with a 3-digit sub-account, like 100. It helps to think of these 4-digit structural blocks as elegant sorting buckets. They perfectly connect micro-business simplicity right up to macro-corporate complexity, which guarantees the platform can scale up without putting any strain on the database. Next up, Section 3, Master Refactoring to IFRS. Let's actually look at how this builds into real account structures. This is how we translate the past into the future. Generic legacy codes are now securely locked into dedicated, expandable child posting accounts that preserve strict IFRS compliance. For instance, that old generic sales code G010000, that gets refactored into G41000100 under operating revenue. The old bank account B810000 is recoded to B101000. That enforces cash asset priority under current assets. And the old legacy G9000 creditors account is completely scrubbed and transitioned to G21000100 accounts payable under current liabilities. It's all about creating a deeply organized, fully compliant ledger. A massive part of this refactoring is cleaning up what used to be developer nightmares, specifically duplicated accounts that just confuse users and lead to split postings. So a really critical step here is explicitly locking parent accounts, like the G6000 marketing and selling block, for totaling only. Direct posting to this parent is now strictly forbidden. By wiping out those redundant blocks and forcing active subaccounts to own a distinct, completely unduplicated operational purpose, you permanently prevent split postings. Plus, it makes bank statement matching rules incredibly predictable. We are targeting exactly 19 sector-specific books for this migration. For the English markets, the master matrix covers templates for church, farming, manufacturing, medical, personal, restaurant, retail, school, service, and workshop. And right in parallel, the AFRIKAANS localization, the FBDrive templates, must be rebuilt to cover BOERDERY, DIENS, KERK, MEDIES, VERVAARDIGING, and Workshop. Rebuilding all of these against our exact account code matrix is what ensures a globally stable release across all these wildly diverse industry requirements. Section 4. The Repository Rebuild Matrix. With the structural theory out of the way, here is your concrete, step-by-step developer playbook. First things first, base seed selection. I literally cannot stress this enough. This is a major warning for developers. You must strictly source your base seed files from either Path A, which is the local TurboCASH5 release candidate to repository, or Path B, the OS Financials web wizard. Why? Because these templates already have the modern varchar 128 fields baked right in. If you try to use older legacy downloads, like the 5.3 RC9, they ship with a legacy BAT types description field that is restricted to just 16 characters. Using those older files will instantly break your database schema hierarchy the very second multi-byte localizations are applied. So, what's the exact workflow? Well, it's a very strict 4-step protocol. Step 1, ensure your database initialization script expands those SQL field lengths to varchar 128. Step 2, rebuild the English master template sequentially using that new 4x3 framework we talked about. Step 3, map the AFRIKAANS files using the exact same matrix, making sure you keep parent totaling rules completely identical. And finally, Step 4, if any type or transaction group configuration gets altered in the types table, you need to immediately update the corresponding language files to match. By sweeping through the repositories using these 4 exact steps, you are going to permanently clear out all those legacy design flaws. Finally, Section 5, Scaling MSMEs to IFRS. Let's talk about the ultimate payoff of this entirely new blueprint. We are providing a zero-friction growth path for micro, small, and medium enterprises, which allows them to scale effortlessly into full IFRS compliance. For instance, let's look at tax compliance for startups. In this new layout, the VAT Reger sequence is deliberately disabled by default. This is actually a crucial system context rule to prevent micro-enterprise users from accidentally issuing illegal tax invoices when they don't have a valid VAT registration. But, and this is key, these structural placeholders remain locked in their exact database positions. The moment a business crosses that R2.3 million threshold for VAT and the new SARS turnover tax, you just seamlessly toggle this block to active. That immediately opens up pre-mapped, highly compliant input and output reporting. The real magic here, the true bridge between micro simplicity and complex compliance, lies in the rigid S-group string design. A micro business owner can just read explicit, simple sub-account lines on a daily basis. Things like cash, customers, or daily sales. However, when audit time rolls around, the system automatically aggregates those exact lines into statutory IS-1 presentation formats. They map perfectly to complex standards like IS-16 for property, plant, and equipment, or IFRS 15 for revenue. This dual-layer capability means the business is speaking the language of international accounting standards from day one, which means absolutely zero expensive database redesigns down the road. We've seen how expanding field limits stops those fatal crashes, and how a modern 4x3-digit architecture ensures safe, scalable reporting, from a tiny micro startup all the way up to a fully audited firm. So the crucial question remains, have you refactored your foundations to ensure your clients can scale without friction into 2026 and beyond? I'd say it's time to go upgrade those repositories.